Let's talk money.
Hello and welcome to a brand new edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. Guess what? This is the last Let's Talk Money episode of the current financial year. Yes, we are all set to say goodbye to FY25, so we thought we'll do it on a high. And if we're talking about highs in our investment portfolio this year, what better than the shiny yellow metal, the sparkling metal called gold? It has dazzled everyone, investors, market watchers, and policymakers alike. 40% gains over the last 12 months. And a lot of you have been watching this on the sidelines, participating as well, and writing in asking whether there is still more juice left in this gold move, whether you should actually change your asset allocation if you were under-allocated towards gold. So, well, to answer all these questions and to help us prep up with the right sort of gold thought process for FY26, we have with us Lakshmi Iyer, who is the CEO, Investment Strategy at Kotak Alternates. And we have our very own in-house golden girl, Manisha Gupta, who, of course, is our in-house expert on commodities. Ladies, what a pleasure it is to have both of you with us. And I must say, Manisha has been teasing us. Every day she'll come into the studio, almost every week, talk about fresh all-time highs for gold. What a breathtaking move, Manisha. Did you see it coming?
Oh, well, you know, it has been since last year that we've been talking about $3,000 an ounce of a price, and we've finally seen it. And if you look at this year itself, Surabhi, there have been 16 days where gold has made a new all-time high. So, well, yes, with nearly 17% of gains in this year, 28% of gains in the last year, and as you said, 40% up in last 12 months. It clearly has been shining very bright.
40%. I still can't wrap my head around that number. And you know what, Lakshmi, the thing is, and we did a show after this because I did the numbers at the end of the calendar year, 24. That time gold was up 30%. And the numbers teach you everything clear, right? So when people talk about asset allocation, it sounds like a lot of gyan. When you see equity down 5-6%, gold up 30%, you realize you should have done your asset allocation, right? What have you made of this massive move?
No, so gold, I think it's time that it progresses from student of the year to being the guru. It is actually the guru of the world, not just any particular asset class, whether you look at gold in dollar terms, in pound terms, in rupee terms. I mean, you name the currency, I think gold is right there shining. And I was just joking with my colleague yesterday that gold is behaving like, you know, Amir Khan in that movie. Have you seen Lal Singh Chadda, where he says, "Main daudta gaya, daudta gaya." I mean, it is just non-stop.
The Forrest Gump of all asset classes.
So true, so true. In the concrete jungle. And clearly, gold is thriving on Trump and tariff, which is the 3 T's of the piece today. And the uncertainty factor makes everyone, whether it is a retail investor or a wholesale investor or the central banks across the globe, make them, you know, kind of do a beeline towards gold because you just can't create gold out of thin air.
No, absolutely, absolutely. You know, I just want to take a step back because a lot of our viewers probably are not watching the market on a day-to-day basis. So, Manisha, help us wrap our head around this because, you know, Trump came into the White House only in November. But this move has been in the making for the last 12 months, like we've said, right?
Yes.
So, yes, Trump and tariffs and uncertainty, all that is now. But what has really been happening in the market that's led to this humongous rise?
Oh, well, absolutely. You know, there'll be a few things in the last couple of years, and one clearly has been the Russia-Ukraine war. Since that has been on, people have been putting their some part of their money into gold. So that portfolio diversification has been happening. And then, in turn, gold has been giving you returns, luring in more people there. It also has been about China's slowdown. And that whole conversation about de-dollarization, well, that was a major reason that you saw prices gain up. And most importantly, it has been about central banks buying 1,000 tons an year for last 3 years is what central banks have been buying gold in their reserves. Also, when you look at the RBI, we are holding 880 tons right now, and much of that buying really has come in the last couple of years itself. RBI did not buy for 5 or 7 years and then started buying in last couple of years. So big buyers is what banks have been, and then ETF buying started to come in, investment buying has started to come in as well. So there are more and more buyers coming in.
This is really interesting. Lakshmi, your thoughts on this, the central bank action that Manisha started, you know, with, because they are the biggest buyers in the market, right?
Yeah.
And like I said, this move has been building well before Donald Trump came to the White House.
Sure.
So what have you heard around this? And you speak to people, you're following the market so actively.
Yeah. So I'll tell you, Surabhi, what's happening is that if you look at the global reserves, okay, which central bankers are owning in the form of currencies, they've started plateauing out. what does that tell you? It tells you that central bankers now want to diversify outside of currency, intuitively the dollar, because, bulk of their currency holdings is in the form of dollar. And they want, I would not say a substitute, but they want something to complement their currency portfolio. And that is the reason, forget India, China, you're seeing countries like Poland, Czech Republic, all of these countries also are trying to buy gold. So it's not just about, I would say that FOMO factor for the smaller central banks, probably the fear of missing out also is playing on that. And why not? When you're excessively dependent on one asset class, whether you're the central banker or you're a retail investor, it has its own peril. It's like balancing on a beam. I mean, you have to balance it, not just right, but try to get it closer to as right as you can.
But it's a bit unprecedented, right? 40% in a year, where touchwood, I mean, yes, there have been wars, there is geopolitics, but it's not like a full-blown, apart from West Asia, which is obviously the big talking point.
Yeah.
We've not seen major disruption in oil infrastructure. It's not like the world is coming to an end moment, and yet gold has gone up. So, Manisha, are there people in the market who feel that maybe it's a bit excessive?
No, not too many, really. Because when you look at the global banks and brokerages, Surabhi, they are still telling you that while, of course, you will see some correction because it has been a one-way buying here. And corrections could come in up to 2,700, 2,500 as well. But then you also have 32 and 3,500, 4,000. I mean, I've read a report for $6,000 an ounce as well in the next 3-4 years. But let me remind you that 2015, and that is when the sovereign gold bond was introduced.
Yes.
In 2015, gold was at 2,500 rupees per gram, 2,500 rupees per gram. It's at 8,800 rupees a gram right now. So if you bought it in 2015 and people have been redeeming as well, I mean, that's the kind of gains people have taken off.
Yeah, absolutely. I'm going to come to that because the sovereign gold bonds became best friends for many of us Indians, myself included, because the scheme was really so good. But Lakshmi, from here on, and we'll come to how to look at it from a personal finance angle in just a bit, but purely from a market positioning, do you think this is still a safe time to be making fresh investments to gold?
So, there are two parts to it. Any asset class, whether it's listed equities, whether it's, bond rally or it's a precious metal rally, in this case, gold, everything has a cycle. And if I tell you that the future is always bright and the long-term trend is bullish, that doesn't mean that the asset class can't take a breather in the near term.
Sure.
And I think we are probably in that phase right now where if we had done this show maybe 3-4 months back or maybe 6 months back, I would say that probably 2025 would be like $3,000 to $3,200 an ounce. And we are seeing that in under 90 days. So intuitively, I'm not saying that it cannot sustain, but it has to consolidate. So if you are a fresh investor who's saying that, I don't want to miss out this rally, I would say it's okay. Just kind of take a pause. And gold is never intended to be like 100% of your investment portfolio.
The thing is that you mentioned FOMO. There's also that feeling of feeling silly. Because while you are chasing the best multi-bagger stock and you're trying to find the best mutual fund and you're wondering whether this mid-cap will become a large cap, here is gold, simple old gold, which your grandmother bought. And it's just, the most simple investment has just kind of, eclipsed everything else, all included. But actually, it's not just gold, right, Manisha? Silver has also had a good run. So just, recap that for us as well.
Oh, well, absolutely. And, while gold is at all-time high, silver is far away from that. Silver's all-time high has been $47 or thereabout. And we are trading at 33, 34 right now. But if you look at the last 3 or 4 years, we've been making higher highs. And silver is also strong because the fundamentals are quite positive. This is going to be a 5th straight year of deficit in global markets for silver. This also is going to be a 4th straight year of record industrial demand, because silver is used from your phones to your chips, to your battery, to your AI, to your energy transition. So silver has way more uses than perhaps gold.
Practical, sort of physical market uses as well. So when you sort of talk to all the dealers out there and the market experts, what's the sense? More bullish views on gold or on silver going forward from here on?
So, the way the pattern always has been that gold starts to go up and silver always follows. But then silver suddenly makes that very volatile sky,
it like shoots up.
It does.
Yeah.
And that's exactly something that the markets are waiting for at this point in time. So while you have forecasts of 40 and 42 for this year and perhaps 45 the next year, well, yes, people are very, very bullish on silver as well. And now because we have silver ETFs as well, so that's yet another way of investing.
Yeah. Okay, so we'll talk about investments, but before we let Manisha go, she has to run and look at other things as well. The sovereign gold bond, It was a beautiful scheme. You know, it allowed you to buy gold without physically taking ownership of gold. It was backed by the government of India. It was paying you 2% additional interest.
2.5%.
2.5% over and above the capital appreciation. But it's over and done now, right? I mean, there are no tranches and nothing new from the government on this at all, right, Manisha?
Yeah, right. The last tranche that we saw was in Feb 2024. We haven't seen anything after that.
Yeah.
So, you know, the whole idea perhaps back in 2014-15 was that the gold prices will go higher, but not at the speed that it has really done. And that's perhaps the government also perhaps saw it as. So, but from where we stand right now and the way the gold is doubled just in last 2 years or so, it clearly has been not a very profitable view for a government there. But even more interestingly on this is that even as a lot of people bought sovereign gold bond, not too many of them have, you know, pre-redeemed it in 5 years. Everybody is holding for those 8 years, getting in that 2.5% as well. And where the gold prices have run up, it has been perhaps the best of the schemes that we've seen. So I wrote an article recently which says, governments envy but investors pride.
Oh, absolutely, absolutely. It's been a dream come true. And what can we say? We can only thank the government of India. Your thoughts? Do you have any hopes, Lakshmi, of this? In some form, this gold bond scheme comes back?
See, there are no free lunches. How can there be free gold? I mean, if you're getting 2.5% extra, which is free, and your counterparty is Government of India, the beeline should have been much, much more than what we actually saw in the tranche collections. Yeah, I mean, we have to say that all good things have to come to an end. So it looks like, you know, the beeline that now investors are making towards gold ETFs, you know, you are actually seeing, you know, the folios, you know, increase month on month and the net sales being added, you know, into the system. I think that's giving you a good hope, except for, if I remember, April, you know, of this financial year, where the net sales were marginally negative. Gold ETFs have consistently seen positive net sales.
And whenever the price shoot is higher, because I track that AMFI data, which comes every month, typically gold ETFs will draw in lots of money.
But you know, Surabhi, I have a point to put here, because because the base is very low is the reason we've seen numbers grow up a lot. But Lakshmi can throw light on this, because when you look at the overall AUM within mutual funds, gold ETFs isn't such a big thing. It's like a 1 to 2% perhaps.
So, yeah. See, the industry is close to 65-70 lakh crores and the gold ETFs is just about 55,000 crores. But here's the deal, Manisha, you know, we are educating investors to own paper gold, something which they're not going to see, touch, feel. That takes like light years to educate, and from there
I hope not.
No, I'm telling you, because the thing is that you know I've been part of these investor awareness programs. People want to touch and feel their gold, especially women. And what so happens is that now that you know, last 2 years, for example, if you see folios which are under 50 lakhs are now touching almost 70 lakhs. Now again, bases are very small. 13 ETFs now are 19 ETFs. So I think you're kind of catering to that demand as well, isn't it?
No, but I have full faith in the brilliance in the mind of the Indian investor. The moment the investor figures that this is right and this is working, they're very quickly to lap it up. It's a question of just figuring it out. And I think for two asset classes, which is gold funds, gold ETFs, and REITs, we did a show on REITs as well, it's a matter of time when this really picks up and the awareness kind of grows. But thank you very much. We have to let Manisha go. By the way, Manisha, you personally are a big investor in gold as well?
I am.
Is it jewelry or is it investments?
All sides. You know, that's exactly what we were talking about, that when SGBs came, it wasn't that India's import of gold dipped any, because it was still 700 to 800 tons. So people are buying gold always.
We want to wear, we want to invest, we want to keep in the bank, we want to do everything with gold.
True that.
All right, we'll have to take a very quick break on that note, but the conversation continues on the other side. Now that you don't have the sovereign gold bond scheme, what is the next best way in which you can take exposure to this shining asset class?
Let's talk money